Ivan and Flo. We have this corporate enterprise, and sadly it's going to be liquidated. And now we want to look at the tax effects to the corporation. All right? Everybody agree? Right now, we're not looking at the effects to the shareholder, guys, right? That was the first part of our exercise. We're looking at the effects to the corporate enterprise that has gain acre, loss acre, and cash, right? And it's making distributions to shareholders. Okay? Here's Flo, and here's Ivan. And we're told Ivan owns 60% and 40%. Agreed? 60-40 shares. Okay? Now, I don't care, this is up to you on how you do things. You might want to, I don't know. Hey, well, listen. Is Ivan related in tint? Yes. Why is he related? What code section? More than what? 267. More than 50%. Agreed?
So you quickly said before the 318 comes in?
I didn't say that. Did I say 318? I said 267 comes, 1318.
You were saying like everybody did that's important is 318. I just want to make sure it doesn't.
318 does not.
Okay.
I apologize. I just meant it could come in for other reasons. Like my brain just, we're related, not related.
Okay.
My brain goes.
But under this section.
Under liquidations, it doesn't. 318C says when it, when it gets invoked for 302 purposes, for example.
Okay.
Here we're dictated by 267. X distributes each of his assets to Ivan and Flo as tenants in common in proportion to their stock interest. Ivan takes a 60% interest and Flo takes a 40% interest. In other words, guys, there's a concept in property tax law that says that you can own property. Many of you, if you're married, for example, might own property 50-50 with your spouse, right? Joint tenants. But there's another ownership interest called tenants in common, where you own property 60% and 40%, and you own title to that property as tenant in common. Okay, so you get the visual that Ivan and Flo are going to own each of these properties in proportion to their stock ownership. Agreed? Company poof disappears. I'm a magician. And they're going to own the property, corporation disappears. Everyone have that? And we're not computing gains and losses to Ivan and Flo. That's the topic we looked at before. We're now focused at the corporate enterprise. We want to know its gains and losses, and we do not care less about its earnings and profits, right? Those are just going to go by the wayside. Okay, speak to me. Speak to me. I want to know the gains and losses here to the corporate enterprise in this concept. Allie, we haven't heard from you tonight. So what happens here?
I don't know.
What do you think happens? I'm not going to let you go that easy. Gains and losses recognized or not? I'll give you a hint. Get half of it right, the easy part, and then we'll move on.
There's a gain
Of how much?
of 4,000. No, 3,000.
We're at 300. But who's counting? There's a 300.
You got apple. Of 300, sorry.
I'm the teacher. Aren't I supposed to get
Yeah.
the apple? Don't throw it at me. Don't like the answer. All right? 300 should be recognized. Okay, everyone agree? $300 gain should be recognized. Okay? Everyone's going to get that part of the problem. If I ask a short essay question, you get some points, right? Easy points. Okay? Agreed? What about the loss here? Would the loss be allowed or disallowed? Because that's the other part. Would the corporation recognize the loss or not? Andrew, we haven't heard from you.
It would be recognized
And why?
because the asset's been held for more than 5 years.
And
So that would be a $400,000 loss for the company.
But,
Per
in other words, it's pro rata, right? There's no bullet distribution, so the loss would be allowed here. Agree? Agree.
Do you want us on the exam to break it down by asset, or you say 100,000 loss?
I would like you to say, in this problem, $300,000 gain and the loss would be allowed, and definitely, I would break it down.
You could break it down.
I would break it down. Christie's saying, can you combine the two and just come out with the conclusion that there would be overall, the corporation would be allowed a $100,000 loss? Everyone see that?
Yes.
There's a gain of 300, and there's an allowable loss of 400. Everyone see loss acre gives rise to 400?
And we need it. Even if we didn't need it. Yes.
Right. I mean, I have to think about it, but I think the better answer would just say, tell me this way, I know where you're coming from.
So in that case, we gotta look into the backdrop of finding a rule, right?
We always have, you have to look at all of them. All right?
What about the fact that I is related here? Does that do?
Doesn't matter, because it's not being, hold your question, hold your question. All right, so your answer to A, gain recognized, loss allowed. Okay, we're all there? Question B, same as A, except that X distributes loss acre in cash to Ivan, and gain acre to Flo. Now just look for 1 second. I just want to make sure you understand economically. This makes sense. Everyone agree that Ivan is getting $600,000 worth of value, and Flo's getting her $400,000. You see that? Just Flo is going to demand $400,000 worth of value. So is Ivan. So X distributes loss acre. X distributes loss acre in cash to Ivan, and gain acre to Flo. And do you finish the apple for a second, Allie?
Yeah.
Is the gain recognized?
Yes.
That's all I need to know. Priscilla, is the loss allowed?
No.
And if not, why not? You said no, but just tell me why. And I'll give you comfort here. You're right. Just tell me why.
It's not pro rata.
I'm sorry?
It's not pro rata.
It's not pro rata. And then what code section would you say?
336D1.
Say again?
336D1.
Okay, 336 D1. Okay, D1A. Right? It's not pro rata. And I'm in the related parties getting. Everyone see the loss here would be disallowed. When you say the loss is disallowed, at the corporate level, the Form 1120, the corporate tax return, would not report the loss. In contrast, in the earlier part of the chapter, we were talking about what would be reported on these taxpayers' Form 1040, their Schedule D of their Form 1040.
So A is at the shareholders level, while B is at the corporate level.
All right, say it slowly again.
Question A is at the shareholder level.
Who said that? They're both at the corporate level.
Okay, so why the loss was disallowed on A and it's
No,
not
who said the loss is disallowed in A?
No, it's allowed on A, but it's disallowed on B.
Because it's disallowed in B, because guess what? Ivan's related, right? And Ivan is getting the lost property, right? That's a no-no.
He's not like basically.
By the way, I read reviews. I should stop there. Yep.
Well, now you can't stop.
I can't stop. You guys ever see that being advertised that no-no for hair removal?
Yes.
Did anyone ever get that? Okay, Christina's the worst present ever. Now tell me, I looked at reviews on that, and they say it just simply burns your skin.
Smells so bad.
But does it work? Smell I can deal with.
Okay, it works for a day, and it's just like you have to shake. It's just like shaking. You have to do it every day, and it's annoying, and it smells of your whole bathroom.
Okay, so
Like,
you're
and
not.
it's scary because it like all of a sudden when you put it on your leg, it goes and like it just really scares you. I seriously sold it on eBay and didn't tell my mom.
How much was
People buy it, I'm serious, I sold it for just as much as my mom bought it for.
That's amazing. How
Yeah.
much did it cost? I thought they were like.
Like $200 something.
What?
Yeah.
Yes, $250.
Yeah.
You're great for this.
Outrageous.
Wow.
Actually, it's funny you brought it up, my mom just asked
I
me.
brought it up by saying the word donut.
Oh, you said about the donut commercial. My mom just asked me the other day how it's working.
Can she borrow it?
Yeah, she asked, and I was like, oh, I can't find it.
I use it so often I have to recharge it. I can't give it to you.
I don't know what to tell her. It's horrible.
All right, there you have it firsthand, guys. All right.
Professor, so
Yes.
you said it's not allowed because he's getting the lost property, but
What?
assuming that
But just tell me, just so we're good with each other.
Mhm.
It's not allowed to who? Just so I.
to Ivan.
See, that's what you're scaring me when you said that, and I thought you were going to say that.
Okay.
Ivan has nothing to do with this question.
I'm sorry. So back to the corporate. It's not allowed to the corporation.
Exactly.
Okay.
Be careful. Right?
Okay. So
Keep
it's,
going.
but it's not allowed because the distribution is going to a
A
related
related party.
party, and it's not pro rata.
Well, it's right. It's party
Okay,
to
because
him. In
it-
contrast, problem A was pro rata, and
Right.
the loss was allowed.
So assuming he was getting 60% of that lost property, it would have been allowed.
Assuming that D2 didn't apply.
D2 didn't.
That it was not one of the tax motivated.
Okay.
We're good? So, Tima, for your notes, you have question A, question B, and it's all pertaining to the corporate level. And you're pushing down because you're not looking up. And Joanne, you got this because
Mhm.
it has nothing to do with Ivan.
Okay.
Ivan's under 331. Did I knock that